Blog Talk Radio.
Hello, everyone, and thank you so much for joining us on another exciting episode of Realty 411 Radio. And this is our Invest Wisely segment. And today we have the pleasure of connecting and interviewing with Michael McHale, founder and CEO of Stratton Equities. Now, Stratton Equities is the nation's leading hard money and non-QM lender to national real estate investors. And Stratton Equities offers the largest variety of mortgage loans and programs under one roof. Now, having launched Stratton Equities in early 2017, Michael has always been an entrepreneur and an innovator in the real estate market, purchasing his first home at 19 years of age, utilizing hard money. Now, Michael's a serial entrepreneur with a foresight for business opportunities, and he's had a slew of small businesses prior to launching Stratton Equities. One of his most prolific ventures was a car wash connected to a gym, which he was affiliated with, launching in Florida. Now, Michael officially joined the mortgage industry in 2003, and by 2017, Michael noticed how the mortgage industry had transformed after the regulations presented from 2008 through 2012. He knew it was time to set out and start something on his own, and that's when Stratton Equities was created. Under Michael's leadership, Stratton Equities has grown into one of the largest leaders in the mortgage and real estate industry across several genres and platforms. Welcome, Michael. It's a pleasure to have you.
Thank you, Linda. It's a pleasure.
Well, we know you're so busy, and we'll just get started and get right into it. Let's start with some insight on the private lending industry. Now, Michael, how have you been doing during the national real estate frenzy that we're seeing right now?
It's been interesting. It's in the investment space. Is actually, I think for most people, has slowed things down because obviously real estate investors need to find properties at below market value and find them distressed below market value on a deal. With property values skyrocketing and now real estate investors competing with end users and owner-occupied borrowers where, you know, they're paying $50,000 over asking price for a home, and a home is going off the market within 24 hours, it's making it significantly harder for real estate investors to pick up deals at this time. If you look at a lot of fix and flip or bridge lenders that don't have the term loans, the no-doc, or the soft money and the non-QM programs that we do, they actually don't have the volume they had pre-COVID, again, because there's so many fewer investors that are able to pick up deals at a discount the way you have to qualify for those loans, that it is actually hindering the volume of business that's coming in to most companies. We're very lucky that we have an extremely wide range of programs. Our most popular programs right now are soft money, our non-QM, and our no-doc programs. Those are term programs, so 5/1, 7/1, 30-year fixed. That's pretty much a lot of the bulk of our business right now. When if you look at it, a year and a half, 2 years ago, pre-COVID, we're probably 50-50, 60-40 between term loans and bridges.
Very interesting. Now, the whole segment is called Soft Money is the Future of Real Estate Lending, Michael, and we want to touch upon this. Now, very interesting term, soft money. What is it in comparison to the traditional hard money type of lending?
Well, so a hard money loan there's always going to be a bridge. A lot of people, like, I wrote the article, Investment Guide, Hard Money for Fix and Flip, where we try to do a lot to educate people in the marketplace, but everybody calls everything a hard money loan, and it's not. So if it's not a bridge, it's 12, 24-month bridge, it's not a hard money loan. Fix and flip loan where you're going up to 90 LTV on a purchase, that's not a hard money loan. So a hard money loan, a true hard money loan, like when I bought my property in 2001, I think. It's 12 months interest only bridge. It's low LTVs. It's a hard money loan. You're talking about 60, 65 LTV generally max. You might push to 70, but generally 65, 70 LTV max. That's going to be a true hard money loan, which somebody that's doing a rental property or a buy and hold, or they're keeping the property, or they're going for cash flow. That's not the program that you want to use. So soft money is a hybrid of that, where it takes a lot of the attributes and the benefits of traditional financing, which, of course, anybody who's tried to get traditional financing on investment properties know how difficult that is and how many hurdles you have to go through. But it has the benefits of traditional financing, and even some more benefits, which I'll get to in a second, with the easier guidelines and the faster turnaround times on closing that a hard money loan has. A big thing that we did was, if you look at traditional financing, so a QM loan or an agency loan, guidelines are on a 1 to 4 family investment property, they're maxing at 70 LTV. Well, with our soft money program, on a 1 to 4 family investment property, you can go to 85 LTV, so 15% less down, and that is with no upfront fees, no junk fees, and especially no tax returns. So it is designed for real estate investors who are shuffling money around, or entrepreneurs and don't show a lot of money on their tax returns or W-2s, so couldn't go to a traditional bank and secure traditional financing. And even if they could secure traditional financing, it's most likely going to be 70 LTV max on a regular QM or agency loan, when with a soft money loan, you can go to 85% and only put down 15%.
Wonderful. Now, you mentioned that it's a difficult market right now. Let's face it. I mean, the other day I inquired about a property myself. They had 3 cash offers, 7 offers total. It's a frenzy out there. However, investors that have access to private capital with Stratton Equities can get the edge. Can you tell us a little bit about how they can benefit and how they can get that edge over other investors that may not have their ducks in a row when making offers?
Well, the big thing for us is we have very high LTV. So if our fix and flip programs will go to 90 LTV. I'm pretty sure our soft money program is the highest in the industry, at 85 LTV on a no doc, no tax return term loan. So I'm pretty sure the 85 LTV is the highest that I've seen. I've seen other companies, they're 70, 75 LTV, so going to 85.
Yeah. So
obviously, less money down can allow you to purchase more properties at once and spread your money. The big thing about us is our internal staff is, I would think, the best trained in the industry. They go through extensive training before they go live. Our processors actually even go through underwriting training for a month to when they're still a processor, but they still know the underwriting, so we can get ahead of the program and get ahead of the processing. Our loan officers go through a very extensive training and very well trained and constantly being trained. So a big thing that we don't do is we don't just take in business. Like a lot of companies, okay, apply, and then we'll see what happens when the underwriter approves it or not. Our loan officers know up front if the loan's going to move forward, if it's not, if the borrower qualifies or doesn't. And we don't just here's an application, fill it out. We have no idea what's going to happen. We'll submit it, drag you through the whole process. And then if the underwriter approves it or not, it's approved. So when we submit loans into underwriting, in the processing into underwriting, those loans have a significantly high conversion ratio on closing because we only submit qualified loans or qualified borrowers up front.
Fantastic. I love the fact that you guys won't waste an investor's time, and you won't waste your time either, because let's face it, time is money, and investors need to know ahead of time as well if they're going to be able to qualify or not, and if the deal's going to work or not as well. Now, share with us your contact information, Michael.
Yeah, so everything goes through our main site, which is StrattonEquities.com. They can contact us on our 800 number, 800-962-6613, which is also on our website, or they can email us at info@StrattonEquities.com. But once you hit the StrattonEquities.com website, there's a ton of information, and there's multiple places to apply. If you're a broker or if you're a borrower, there's multiple links to apply. We make it definitely very easy to apply.
Wonderful. Fantastic. Now, for those investors that are experienced, they know what a deal looks like. But what about those investors that may not have as many deals under their belts? When they bring a deal to you, are you able to tell them, hey, this deal's not going to work, the numbers aren't there, or you're going to need, more of a down payment in order to make it work? Does your team kind of guide newer investors as well, or are you more interested in working with sophisticated investors that have been in the business for a long time?
We work with both. We definitely work with a lot of new investors. We round them away. But yeah, so our team will, guide them in the right direction. Unfortunately, a lot of people still think there's 100% financing out there. Some companies say they do it, but I've never seen a real one. So, unfortunately, you do get a lot of people that don't have enough down payment or whatever the case may be. But again, we don't put them through the ringer. We don't have them apply. Our loan officers will structure the deal and probe the deal up front on the initial call. And if it doesn't fit, then obviously they'll tell them it doesn't fit, or this is why, or et cetera, et cetera.
Perfect. And can you review some of your most popular funding programs right now, Michael?
So our most popular program right now is our soft money program. Again, a big reason is the LTV. It goes to 85 LTV, 5.171 30-year fix. Rates start at 4.375, which I believe is the lowest that I've seen in the industry on those types of programs. It's like a no-doc. There's multiple terminology. You call it a no-doc program. You call it a no-income verification program. You call it a stated program. People have different terminologies for it. But for ours, it is a true no-doc program, which is our soft money program. But the LTVs are higher. It goes to 85. So that's our most popular program right now. We can fund, 1 to 100 units, mixed use, multifamily, commercial, like commercial industrial. We're doing a lot of that. As I said, the bridge programs are not as prevalent right now due to the fact that investors are having, obviously, a hard time securing bids and securing financing with, property values, going up as high as they are, and as many bidders, end users in the marketplace. It's very hard to secure a deal because obviously, anybody knows fixed and flip programs. In order to qualify for a fixed and flip program, you have to buy the property significantly under market value. And with properties going over market value, it would never qualify for a fixed and flip loan. So companies across the board, especially on the East Coast where we are, Florida, the Northeast, property values have definitely skyrocketed, and it is significantly more difficult for an investor to win a bid these days.
Okay. Now, even though you're located in the northeastern part of the U.S., you do fund deals all over the country. Is that right, Michael?
Correct. We are in 45 states.
Wonderful. Share with us your contact information one more time, or your website address, so our listeners can get more information right after this podcast.
So it's StrattonEquities.com, which is the main website. They can email us at info@StrattonEquities.com. They can call the 800 number and speak to a loan officer directly at 800-962-6613.
Wonderful. What are some key things that, in your opinion, investors need to know when choosing a capital partner to work with?
I mean, the big thing is, and I've been in business for 20 years, is are they going to close, right? I mean, the interest rate can be 1%, If the interest rate is 1%, but you can't close, it really means nothing to you. So unfortunately, people just look at rate, which is not the way you'd want to shop a mortgage. People just think whatever the lowest rate is, that's the best deal. Anybody knows if you're buying an investment property, time is of the essence. If you're with a lender that's taking way too long to close, or you can't get an appraisal on time because they don't have the leverage. Like we do a significant amount of business. So with title, with appraisals, with surveys, with the whole process of securing a private money loan, things for us move significantly more quickly because we do have the leverage of size that we do, and we have the know-how. We've done thousands and thousands of deals, so our team internally knows what to look for and knows what to get ahead of time to secure financing and get the loan approved quickly for the borrower.
Wonderful. Folks, definitely reach out to Michael with Stratton Equities. They can definitely help you put that next deal together. Their phone number, once again, 1-800-962-6613. And their website, StrattonEquities.com, and that's spelled STRATTON Equities.com. Michael, it's so wonderful to have the insight that you have, and the fact that you're sharing it with all of our readers and our investors, and you're making the opportunity available for them to have access to your financing programs. Thank you so much. We really appreciate you, coming on this program and sharing your knowledge, and also making your private capital available for all of our listeners and readers.
Absolutely. It's been a pleasure. It's always a pleasure working with you. And, yeah, if anybody has any questions, definitely feel free to reach out to us, StrattonEquities.com.
Well, I do have another quick question, Michael, because I wanted to also, I also wanted to talk a little bit about the opportunities you have for brokers who are interested in working as a real estate professional with Stratton.
Yeah, we have a very unique program on how we operate. Brokers definitely like it. We handle. Again, we do everything in-house, and nothing is outsourced with us. We have a very fast turnaround time. And, again, same thing with brokers, right? We don't tell a broker, yes, we can do it, and drag them through. We either kill the deal up front over the phone if the deal doesn't fit, and if it does, then obviously we'll go to the next step. The big thing with us, if a loan cannot close with us in-house, that deal is now not moving forward. It's a deal to us. Unfortunately, a lot of people in the industry, everybody knows this, will just leapfrog the deal and go, oh, I can't do it, John can do it. Oh, John can't do it, Mary can do it. And then the whole thing just goes haywire. So we don't do anything like that. We never have. It was a policy of mine from the get-go that if we can't close a loan in-house with our own programs, we don't refer it out or give referrals or say somebody else can do the deal. It's either we can do it or we can't.
Wonderful. Now, is there anything that you would like to add, Michael, that maybe I didn't touch upon?
No, I mean, everything was fine. If you have any other questions, I would be, definitely happy to answer them. We can talk for hours and hours and hours on, investing, investment strategy, and the market. I definitely just say if you are a real estate investor, it's much easier to have your paperwork and your ducks in order. So that when you do apply for a fund, the biggest thing in any mortgage company in the country is obviously the borrower getting their ducks in order. So when the processor sends you out the list and the STIP of acquired docs, it takes some people a while to gather those documents because they don't have the documents in order. Definitely, if you want to be a real estate investor, you should have all of your documents and have everything in order so you can move the underwriting process along quickly.
Do you recommend that borrowers and investors get pre-qualified so they know exactly how much money they're able to acquire before they go out looking for properties in that budget?
Yeah, well, it's difficult. I mean, you can't really pre-qualify much with a fix and flip loan because it's it's based a lot on the property and the deal itself.
Okay.
You could get kind of pre-qualified, but on a term loan, you have more of a chance of getting pre-qualified. The big thing is really location. So with us, it's big on location. All the private lending programs in the market are big on location. There's some locations you can't lend in, or you can lend less of an LTV. So that's a big thing, is depending where the location is, down payment, and then credit score. So the soft money programs, the no-doc programs, those are all for a 650 FICO score or higher. Definitely higher would be much better for the borrower. And then, of course, liquidity. So you have to have enough money for, obviously, down payment, closing costs, reserves, title fees, and all the extra. So, if you have a good credit score and you have significant liquidity and the property's in a good location, meaning a prime location, then it should be relatively easy to secure financing.
And what type of credit score is something that you guys, want to see, Michael? Is there a particular number that investors should strive for?
Well, I mean, it depends on what property type, location, and obviously program, and then down payment. So the lower the FICO score, the higher the down payment is going to be. The higher the FICO score, the less the down payment is going to be. So if somebody wants to achieve the 85% financing on the soft money or the no-doc programs, definitely have to have over a 720 FICO score. But that's not saying that you can't have a 680 or a 650 or a 670. You can still secure financing. You just might have to put a little more down.
Wonderful. Well, Michael, it's been a pleasure to connect with you, and I want to thank you for sharing all your insight with us today. We encourage all of our listeners and readers to go online and visit StrattonEquities.com. That's StrattonEquities.com, STRATTON Equities.com. And the phone number is 800-962-6613. Thank you so much again for your time, Michael. We really appreciate all your wonderful insights.
Anytime, I appreciate it. Thank you very much.
My pleasure. Well, folks, we want to thank you for tuning in to another episode of Realty 411 Radio. We really appreciate your time, and we hope that you've gotten some great tips and strategies on today's program. We encourage you to also visit Realty411.com for the latest information and for insight on all of our events across the country. Once again, be sure to explore the Stratton Equities website at StrattonEquities.com, and that's spelled STRATTON Equities.com. Once again, their phone number is 800-962-6613. Thank you so much, everyone, and make it a great day. Bye-bye.